Government accounting. Government accounting encompasses the process of analyzing, recording, classifying, summarizing, and communicating all transactions involving the receipt, such as business income, service income, grants and donations, taxes collected from fees and other receipts and revenues, disposition, such as those obligations incurred by the government. Say, for example, government infrastructure projects, payment for maintenance expenses, financial expenses, capital outlay, also personal service, government funds and property, and interpreting the results thereof in accordance with Section 109 of PD 1445. The government has three branches. We have the so-called judicial branch, executive branch, and legislative branch. The judicial branch interprets the law. The executive branch executes or implements the law, while the legislative branch will create or enact the law. One of the laws enacted by the legislative, which is very significant and vital, is the yearly GAA, which stands for General Appropriation Act. The legislative, having the power of the purse, is mandated by the Constitution to enact a law known as Appropriation Act. According to the 1987 Constitution, all appropriation, revenue, and tariff bill should emanate from the House of Representatives. Later, we're going to discuss the budget phases or processes in the government, the four phases, and one of the phases is the budget legislation. Okay? And after the said bill will be passed in the House of Representatives, it will be transmitted to the House of Senate and undergo the same process. First reading, second reading, and third reading. First reading, just to read the sponsored bill, the General Appropriation Bill. After first reading, it will be referred to the Committee on Appropriation, wherein the legislatures or the House of the Representative and the Senators will undergo budget hearing in aid of legislation, and after that, second reading for the debate, and third reading to vote whether they will approve or disapprove the bill. And after the bill pass this three reading, it will now be transmitted to the president. However, in case of disagreement, in order to thrash out and have a compromise between two houses, the House of Representatives and the House of Senate, they will conduct a bicameral conference. Then after that, the approved bill will now be transmitted to the president for him or her to approve or disapprove the said bill. If the president will approve it, it will become GAA, General Appropriation Act. Otherwise, the president may either veto the entire bill or will veto an item of the said bill. Aside from the three branches, we have the three inherent powers of the state. Inherent powers. And we have the so-called police power, power of eminent domain, and power of taxation. Police power is the power of the state to regulate, to promote the general welfare of the public. Say, for example, in applying for a PSA certificate, you have to pay fees, you have to apply, and there will be verification. More so, okay, with regard to NBI clearances, you have to apply, you have to pay for the processing fee, and the clearance is subject to verification in order to regulate and promote the general welfare of the public. If you're going to apply for ECC, Environmental Compliance Certificate, in order to promote the general welfare of the public, the DNR has to verify whether or not the applicant has complied with the regulation. Power of eminent domain, it is the power of the state to convert private property for public use. See, for example, in cases of government infrastructure projects wherein a private property will be interrupted, will be utilized, then the owner may claim for payment of its fair market value because that's a valid exercise of eminent domain or the so-called power of the state to expropriate the property. And we have power of taxation. The primary purpose is to raise revenue, so receipts of the government. And secondarily, it is to regulate. Say, for example, those taxes imposed on tobacco, wine, liquor, so the sin taxes, the primary purpose is to raise revenue in order for the government to have funds to finance the socio-economic programs of the government. But secondarily, it is to regulate the use of this tobacco and, of course, consumption of liquor. And so these are the three inherent powers of the state. Let's proceed to government budget. It is the financial plan of the government for a given period, usually for fiscal year, which shows what its resources are, how they will be generated, and used over the fiscal year. The budget is the government's key instrument for promoting socio-economic objectives. The government budget also refers to income, expenditure, and sources of borrowings of the national government that are used to achieve national objectives, strategies, and program. The government budget, say for example, for fiscal year 2024, which is already currently implemented, was enacted in 2023. So there will be overlapping of the budgetary process. Hence, in 2024, budget preparation and budget legislation, it is purposely for the 2025 budget. So currently, the Congress is undergoing the budget legislation process wherein the Congress, particularly the House of Representatives and the Senate, concurrently conduct the budget hearing in aid of legislation. But what they are discussing is about the 2025 budget. So that is how the budgetary process works in terms of fiscal year. Okay. And let's proceed to the four phases of budget process. First, the budget preparation to be performed by the DBM. Budget legislation performed by the Congress primarily according to the 1987 Constitution. All appropriation, revenue, and tariff bill should emanate from the House of Representatives. Now, after a general appropriation bill from House of Representatives has been sponsored, the House of Senate now can also concurrently sponsor a Senate bill. So it is not required for the Senate to wait for the passage of a general appropriation House bill before they can enact or pass a Senate bill. However, the 1987 Constitution is specific or primarily provides that the House of Representatives has the exclusive and primary source of art bill, appropriation, revenue, and tariff bill. So the Senate cannot initiate a Senate bill without first having a House bill sponsoring the appropriation, revenue, or tariff. Okay? The third process is the budget execution. The primary government agency that executes the budget is definitely the DBM, the Department of Budget and Management. And the last phase is accountability. So there must be check and balance. So the budget being implemented or executed by the government agencies, the national government agency has to be checked and reviewed by Commission on Audit or COA. So each phase is distinctly separate from others, but they overlap in the implementation of budget during the budget year. As discussed a while ago, the budget for 2025 is being discussed currently in 2024. And the 2024 budget has already been passed in 2023. So the four phases, let's proceed to the budget preparation. It is commenced through the issuance of budget call by the DBM. What is a budget call? It contains the budget parameters earlier set by the DBCC, the Development Budget Coordination Committee, as well as policy guidelines and proceedings to aid the government agency in preparation and submission of their budget proposal. So it only means that the DBM will require the different agency of the government, the GOCC, GFIs, and other agencies under the supervision of the DBM to submit their budget proposal for the DBM to review and to collate and to prepare a budget plan. Okay, the budget call is of two kinds. The national budget call, which is addressed to all agencies, including state, university, and colleges. Corporate budget call, which is addressed to all GOCCs like PAGCOR, government financial institutions like Land Bank, DBP. Following the issuance of budget call, the various departments and agencies submit their respective agency proposal to the DBM. Then the DBM consolidates the recommended agency budgets into National Expenditure Program or NEP and the Budget of Expenditure and Sources of Financing or BESF. The NEP provides the detail of spending for each department and agency by PAP, Program, Activity, and Project, and it's submitted in a form of proposed GAA. The NEP and BESF are thereafter presented by DBM and DBCC, Development Budget Coordinating Council, to the President and the Cabinet for further refinements or reprioritization. Again, the President, as the driver of the bus, will direct which particular agency has a budget or a bigger pie of the budget or bigger share of the pie in the budget or lower share, because it depends on the policy of the president as the driver of the bus. If the president is more on health, so a higher or bigger share in the pie will be provided or allocated in Department of Health, PhilHealth. If the president is more on infrastructure, then he or she will allocate more funds in DPWH, NIA, etc. Okay. Once the NEP and the BESF are approved by the President and the Cabinet, the DBM prepares the budget document for submission to Congress. So in this case, there is no GAA yet, or the General Appropriation Act yet, because it is the Congress who is tasked to execute, rather create or enact a law. Okay. The public or government expenditures are generally classified into two categories: the capital expenditures or the capital outlay, which are expenses whose usefulness lasts for more than 1 year, such as procurement of land, motor vehicle, equipment, and which add to the assets of the government, including investment in capital of GOCC and their subsidiaries. And another expenditure is current operating expenditures, such as personal services and maintenance and other operating expenses. So these are for the purchase of goods and services in current consumption, such as, say, for example, the payment of uh, gas or diesel provisions, replenishment of supplies, and even payment of water, telephone, or utility bill. Then the next phase is the budget legislation. It is the phase which covers the period commencing from Congress, okay, from the time the Congress receives the president's budget, which which includes the NEP and BESF, up to the president's approval of GAA. So the budget legislation phase, as discussed a while ago, the House of Representatives has the exclusive uh, power to initiate the sponsoring of GAB, the General Appropriation Bill, upon receipt of budget plan from the executive. The House of Representatives will undergo 1, 2, 3 readings, and after that, the House bill will be transmitted to Senate, and it will also undergo 1, 2, 3 reading. The version of the Senate may or may not be the same as the House bill. If they are the same, then it will now be submitted to the President for the approval or disapproval. If it will be approved, it will become GAA. If in case the both houses, okay, have different versions, then a bicameral conference committee will refine or thresh out the differences, and a bicameral committee appropriation bill will be submitted to the president. This phase, also known as budget authorization phase, and involves significant participation of legislative through its deliberation. So initially, the president's budget is assigned to the House of Representatives Appropriation Committee for first reading. The Appropriation Committee and its various subcommittees scheduled and conduct budget hearing to examine the project programs, the PAP, the program, activity, and project of the department and agencies. Thereafter, the House of Representatives drafts the General Appropriation Bill. The GAB is sponsored, presented, and defended by the House of Representatives Appropriation Committee and subcommittees in plenary session. As with other laws, GAB is approved on third reading before the House of Representatives version is transmitted to the Senate. After transmission, the Senate conducts its own committee hearing on the GAB. To expedite proceedings, the Senate may conduct its committee hearing simultaneously with the House of Representatives deliberation. The Senate's Finance Committee and Subcommittee may submit the proposed amendment to GAB to the plenary of the Senate only after House of Representatives has formally transmitted its version to the Senate. The Senate version of GAB is likewise approved on third reading. So both the House bill and Senate bill will undergo first, second, and third reading. The of Representatives and Senate then constitutes a panel, each to sit in bicameral conference committee for purpose of discussing and harmonizing the conflicting provisions of their version of the GAB. The harmonized version of the GAB is next presented to the President for approval. The President reviews the GAB and prepares the veto message where budget items are subjected to direct veto and are identified for conditional implementation. If by the end of any fiscal year, the Congress shall have failed to pass the GAB for the ensuing fiscal year, so for the next year, see for example in 2024, the Congress failed to pass the GAB, then the 2025 budget will be reenacted. The GAA for the preceding fiscal year shall be deemed reenacted and shall remain in force and effect until GAB is passed by the Congress. So a reenacted budget means the budget in 2024 will still be the budget for 2025. So if there are programs, activities, or projects that are not yet implemented, or it needs to be continued, then that will be the effect of reenacted budget. Budget execution, the third phase, is primarily the function of DBM. So this is the phase wherein the DBM will allot the budget to the government agencies. That's why it is the authorization of the DBM. Allotment is the authorization of the DBM to the different national government agencies. So with the GAA now in full force and effect, the next step is the implementation of the budget. It is the task of the DBM to perform the following procedures. Number one, to issue programs and guidelines for the release of funds, to prepare allotment and cash release program, to release the allotment, and to issue disbursement authorities. In order to settle obligations incurred by the agency, the DBM issues disbursement authority, like modified disbursement system, so that the cash may be allocated in payment of the obligations. A cash disbursement authority that is periodically issued is referred to as notice of cash allocation, which issuance is based upon agency submission of monthly cash program and other required document. The notice of cash allocation specifies maximum amount of cash that can be withdrawn from the government servicing bank for period indicated. Apart from NCA, the DBM may issue notice of cash availment or NCAA. So these are the various disbursement authorities. NCAA authorize to authorize non-cash disbursement, and cash disbursement ceiling for department with overseas operations such as the DFA, Department of Finance, and DOLE, okay, for their operating requirements. DOLE for overseas Filipino workers, OWA. So the fourth phase is accountability. It is a significant phase of the budget cycle because it ensures that the government funds have been effectively and efficiently utilized to achieve the state's socioeconomic goal. So the key word here is effectively and efficiently utilized to ensure, so to check and balance. It also allows the DBM to assess the performance of agency during fiscal year. That is why there is a portion or component of the financial statement that is known as the statement of comparison of budget and actual amount in order to determine the performance. So agencies' accountability may be examined and evaluated through performance target and outcome, budget accountability report, review of agency performance, and audit conducted by the COA. This accountability phase uh, provides that the government funds are funds coming from its people, and it should be utilized in accordance with the GAA, in accordance with the law. Otherwise, the officials may be held responsible or liable for malversation of public fund. And it is the mandate of the Commission on Audit to check on the utilization of these funds. If the COA will find it not in accordance with the law or appropriation, then the COA will issue a notice of disallowance, if not an audit observation memo. These are the four phases. Again, the first phase is the so-called budget preparation. Second phase is the budget legislation. The third phase is budget execution. And the fourth phase is accountability. So these are the four phases of the Philippine budget process. Now let's proceed to basic government accounting and budget reporting principles. So each entity shall recognize and present its financial transactions and operations conformably to the following. So you have the generally accepted government accounting principle, accrual basis, budget basis, in accordance with PPSAS 24, RCA prescribed by COA, double entry bookkeeping, FS based on accounting and budgetary records, and fund cluster accounting. The general purpose financial statement, uh, the objective of which is to provide information about the financial position, financial performance, cash flow of an entity that is useful to wide range of users in making and evaluating decisions about allocation of resources. Specifically, the objective of general purpose financial reporting in public sector are to provide information for useful or information useful for decision making, and to demonstrate accountability of the entity for resources entrusted to it. And the general purpose financial statement is composed of the following: statement of financial position or the balance sheet, statement of financial performance or the income statement, changes in net asset or equity, cash flow statement, statement of comparison and budget and actual amount. And this again is a very significant component of FS in order to determine the accountability uh, of the agency under the fourth phase of budget process. And the notes to financial statements comprising a summary of significant accounting policies and other explanatory notes. For books of accounts and registries, we have the following journal: general journal, cash receipt journal, cash disbursement journal, check disbursement journal. And these journals can be downloaded, as well as it can be referred to Appendix 1, 2, 3, 4 of the GAM. We have ledgers, general ledger, and subsidiary ledger. Now, for registries, We have here the REREVOR, the Registry of Revenue and Other Receipts. RAPAL, Registry of Appropriation and Allotment. RAODI, Registry of Allotment, Obligation and Disbursement. And ROBUD, Registry of Budget, Utilization and Disbursement. So these are the registries that you have to memorize. Okay, you have to consider in case of receipt from grants, donations, collections, business income, service income. These receipts or revenue shall be uh, recorded in the Register of Revenue and Other Receipt. And the appropriation or allotment of DBM authorizing the allocation or allotment to government agencies, national government agencies, will be recorded in the Registry of Appropriation and Allotment. And in case of incurring an obligation, payment of expenditures or infrastructure projects, as well as disbursement of fund, it will be recorded in the Registry of Allotment, Obligation, and Disbursement. Now, to determine its utilization and disbursement, comparing it with the budget, so you have here the Registry of Budget, Utilization, and Disbursement. Let's proceed to mode of disbursement. So payment disbursement by the national government agency may be effected through Treasury, single account by MDS, Modified Disbursement System, check or commercial check, cash through cash advance. If, for example, travel expenses, it may be done through cash advance. ADA, auto debit or advice to debit account, such as in case of payroll, non-cash availment authority. And the authority to disburse or pay, the national government agencies are authorized to disburse or pay based on the NCA, notice of cash allocation, notice of transfer allocation, CDC, the ceiling, cash disbursement ceiling, and other authority that may be provided by the law. Now let's proceed to budgetary accounts. What is appropriation? The term appropriation is connected with legislative body. It is the authorization made by the Congress or the legislative body to allocate funds for purpose specified by legislative or similar authority. We have three kinds of appropriation: automatic appropriation, continuing appropriation, and supplemental appropriation. Automatic appropriation are authorizations programmed annually or for some other period prescribed by the law, such as, say, for example, the assistance or the social services provided to 4Ps. These are part of automatic appropriation. The social pension of the senior citizen, by virtue of outstanding legislation, which does not require periodic action by the Congress. While continuing appropriation are authorizations to support obligation for specific purpose or project, such as multi-year construction project. So if the completion of the project is more than 1 year, so it needs to be funded, so there is a continuing appropriation. While supplemental, as the name implies, additional appropriation authorized by law to augment the original appropriation which proved to be insufficient for their intended purpose. Allotment, on the other hand, is the authorization issued by the DBM to NGAs. So the budget execution, primarily, it is implemented by the DBM. So allotment is part of the execution. It is the authorization issued by the DBM to NGA to incur obligation. So the national government agencies now may incur their obligation for specified amount contained in the GAA, the legislative appropriation in form of budget release documents. It is also referred to as obligational authority, and this is during the budget execution phase. While obligation is a commitment by the government agency arising from an act, duly authorized official, which binds the government to immediate or eventual payment of sum of money. Say, for example, construction of road, um, building, procurement of motor vehicle, payment of salaries. These are obligations, commitment by the government agency, and it may now be incurred and paid because of the authorization allotment made by the DBM to the national government agency. And the act of paying, of course, is due to the obligation incurred by the government agency. Fund release documents, obligational authority or allotment. The following are documents which authorize the entity to incur obligation. So this is during the budget execution phase. The General Appropriation Act release document, or the GARD, serve as obligational authority for the comprehensive release of budgetary items appropriated in the GAA. The SARO, Special Allotment Release Order, covers budgetary items under for later release in the entity submitted budget execution document subject to compliance of required document and clearances. And we have the GARO, General Allotment Release Order. It is a comprehensive authority issued to all national government agencies in general to incur obligation not exceeding an authorized amount during specified period for purpose indicated therein. So you have GARD, SARO, and GARO. As to the disbursement authority, we have the notice of cash allocation. It is the authority issued by the DBM to central, regional, and provincial offices to cover cash requirements. So those cash out or expenditures needed to be paid in check or cash, the notice of cash allocation is the disbursement authority made and as a supporting document to authorize the disbursement by the national government agency from the DBM. While if the authority issued by the DBM to agency is to cover liquidation for their actual obligation against against available allotment for availment of proceeds from loan, okay, grant through supplier's credit or constructive cash, we have the non-cash availment authority. With regard to the authority of the DBM to DFA, DOLE, to utilize their income collected or retained by foreign service posts to cover their operating requirements and not to exceed. So that's why there is a ceiling. The release allotment to the said post, so you have cash disbursement ceiling. And notice of transfer allocation is the authority issued by the central office to its regional and operating unit to cover the latter's cash requirements. So NTA, notice of transfer allocation. So from central, transferred to regional and operating units. We have the government registries. As discussed a while ago, the REREVOR is to monitor revenue and other receipts. The RAPAL to monitor appropriation and allotment charged thereto. It shall show the original, supplemental, and final budget for the year and all allotment received and charged against the corresponding appropriation. Now for Registry of Allotment, Obligation, and Disbursement, RAOD, we have the RAOD PS, the Personal Services, RAOD MOE, to record the allotment received, obligation incurred, and disbursement classified as expenses, other operating expenses. RAOD FE, classified as financial expense. RAOD CO, classified as capital outlay. So for RAOD PS, we have payment of casual employees salary, plantilla employee salary, head of office, the salary of the president, okay, the senators, congressmen, salary of the justices, etc. And for MOE, say for example, payment of utility bills, procurement or purchase of bond paper, folder, of course, through petty cash, uh, payment of telephone bill. These are part of MOE. Gas allocation, while financial expense, the interest paid to the lending institution, capital outlay, purchase of land, equipment, motor vehicle, procurement of building, and other capital expenditure or capital outlay. And we have registry of budget utilization and disbursement shall be used to record approved special budget and corresponding utilization and disbursement charge to retain income authorized under RA 8292 for uh, universities, state universities, and colleges, and other retained income collections of national government agency with similar authority, revolving funds, and trust receipt custodial funds. So we also have Robodi PS, Robodi MOE, Robodi FE, and Robodi CO. So you have to determine and classify what kind of expenditures or disbursement are in the transactions of the government. Is it uh, for MOE? Is it related to personal service, financial expense, or capital outlay? Now let's proceed to revenue and receipts. Revenues received by NGAs from exchange transaction are derived from the following. It can be from sale of goods or provision of services to third parties or to other national government agencies. Example, we have service income, the payment or fees for registration, permit, tag stickers, clearance, certification fees. So say for example, the payment of NBI clearance, PSA certificate, ECC, PCAB licenses. So these are service income, revenue of the government. Business income, so you have school fees or for state universities and colleges, affiliation fees, examination fees, seminar training fees, rent or lease income. If, for example, a local government unit operating a public market or a mall, um, acting as the lessor, so the rental fees is part of the business income because the government has two functions. There can be a governmental function and a proprietary function. The proprietary function of the government forms part of business or rendering service. Sales revenue, okay. Hospital fees, share in the profit of joint venture, so the PPP, and other business income. Aside from sale of goods, we also have revenue from exchange transactions used by other entity of asset yielding interest. So the government may also derive income from interest, royalties, and dividends. So interest income, charges for the use of cash and cash equivalent or amount due to the entity. Fees paid for the use of entities assets such as trademark, patent, software, and copyright, so royalties. And definitely dividends, the share of the national government from earnings of its capital equity investment in GOCC. Say, for example, the share of the national government from PAGCOR, PCSO, and other GOCCs. So it can be through dividend. So these are the revenue and receipts of the government from the sale of goods, such as service income, business income, and also the use by other entity of asset yielding interest, royalty, and dividends or similar distributions. Another source of revenue receipts are the grants and donations from the various organizations, even foreign um, entities. These grants and donation may be unconditional grants or with a condition. If the grant and donation is with a condition, the cash received from the said grant will be considered as deferred income or liability. So it will not automatically be considered as receipt or revenue until such time that the condition or conditions have been met, or the condition is performed by the entity. On the other hand, if the grant or donation is without any condition, the cash received as grant will be automatically considered as revenue and receipt or income of the government. After revenue and receipt, the next topic will be disbursement. And in order for us to illustrate the disbursement, we will be presenting the different scenarios or transactions with their journal entries, particularly the payment through cash, through modified disbursement system check or cash, as well as auto debit, or we also have the tax remittance advice.